So welcome back to another TPA video, and as you can tell from the title in this video below, this video will be a Q&A answering some of your trading questions to help clarify some things for you guys, and just like that. So for the list today, we have 6 questions for this video that we'll be answering, and from there I'll just spend about 5 minutes or so answering each question, and that will comprise this video. Starting off with the first question, this has to deal with being nervous to starting trading. You're not sure if it's gonna work. People think trading is a scam. There are just so many stuff. So you're nervous, you're scared. People are telling you it's a scam. You've already lost some money in it, so you're not really sure how to go about starting, and all things like that. So pretty much, I'm never really feeling nervous for that type of things. That was a long time ago, but ultimately you have to decide whether you want to start trading or not. Do you want to stay where you are, or do you want to branch out and be able to try something new, have the possibility to find out if trading will work for you, if it fits your style? Because I know trading is ultimately not for everyone. If it doesn't fit your personality, then ultimately it's something that's not going to work out for you. Maybe there are a lot of people who really just want to be working for their money, have that job security, which is totally fine. To each their own. So pretty much you gotta understand that it's either you're gonna branch out and forget the nervousness, forget being scared, forget all the past excuses, and just go through and try a thing, see if trading is gonna work for you, and just get started. It's better to get started than just keep on planning. So pretty much one of the things that you really need to keep in mind about trading is that it's really just odds and percentages. It's actually very simple to be profitable in trading. It's not algebra, right? And there's just, trading is one of those things that you're gonna just need to be really headstrong, and you'll need a good psychology and good mindset. So in the beginning, if you're feeling nervous, that type of feeling is not gonna help you in trading at all. To be backing out of stuff once you've started, that won't be helping you in trading at all. So it's really up to you to just make up your mind whether you want to explore those trading possibilities, the trading lifestyle, being able to leave your job, being able to just pay for certain things that you wouldn't be able to pay for. You got to just consider those things. A good way of deciding what you want. Think of your left hand, think of your right hand. Put where you are now in one hand and put the results of trading in another. See which one you really want. So another question that people kind of ask me about is, how soon will I be seeing profits? Is trading a scam? Is it a get-rich-quick scheme? Things like that. So I always just go about answering this question by saying trading is kind of like a three-part series. It's in the beginning, it's more about getting experience. Moreover, you need experience before you're gonna have the confidence to do the things that you might have seen me do or other professional traders are able to do with their accounts. So you got to think about it like when you start a new job, a new employee job. In the beginning, they're not going to pay you the most money. They're going to pay you a base rate if it's just like a normal average job. And then you obviously have to work your way up to a higher paying job and a higher status. When you get that higher status, you'll have more responsibility and things like that. And the same goes for trading. It's not a get-rich-quick scheme. You won't be able to just start a $100 account and you'll be at $1 million next week. Trading obviously just doesn't work that way. You gotta, in the beginning, it's about getting experience. So you'll have to take your losses, seeing how you can learn from these losses. And I do talk about this here and there, about journaling your trades so you can see where you made your mistakes and how you can improve on your mistakes. And from there, you'll just grow. When you start having a higher balance, like a $10,000 balance or a $100,000 balance, you'll see that there's a lot of responsibility on your part, because who wants to lose $50,000? Who wants to lose that much money? And that type of thing will just weigh on your emotions if you're not prepared to take such a loss, right? So like I say, you got to be really headstrong with trading. It's a lot of psychology over technical analysis. Secondly, it's about growing your account. So you do have a lot of traders who say like, you know what, I'm gonna save up my money and deposit a $10,000 balance, or I'm gonna save up my money and deposit $5,000, something like that. Personally, there's nothing wrong with that, but I just would rather deposit $100 account, $100 to $1,000, and then grow my account up from there. There's no need to start off with $10,000 because first of all, if you're saving up for $10,000, you've had to save for it first of all, right? So it took time. Maybe it took a month, maybe it took a year to save up that money, and you don't want to deposit that in your trading account and then just lose it because you're inexperienced. You just lose it because you think, oh, I have so much room for error, and then now you have no more balance, right? And there's a lot of memes out there and things like that where someone does something like this. They save up $100,000, they save up $10,000, they deposit it, and then they go ahead and lose it within a week, right? So to avoid all that emotional pain that you're gonna go through by going through those type of losses, you can just go through and deposit a $10 account. Gain experience by using that $10 account. It will be very hard to grow that $10 account, but it is something that you can do. You've probably seen me do it, or you can see other traders grow $10 accounts, grow not even just $10, but $100 account sizes, $1,000 account size. You can just see people grow these, and when you do start growing these accounts as well, it'll help build your confidence, it'll help build your experience, so you become more familiar with what's going on, and you'll have more belief in yourself that you can continue to do this, right? So you deposit $100 account, and then you grow that to $1,000. And then once you see you can do that, you know that you can grow that $1,000 to $100,000, and just repeat the process, right? You withdraw when you feel like it, and if you realize in withdrawing when you feel like it isn't working for you, then just create a system to withdraw. Say every time I double my account, I'll withdraw 50%. Every time I do something of the sort, you withdraw. So you keep a system in place and you follow your rules. So third on that little list there is making money actually comes last. So contrary to belief, people think, let me just get in trading, make some money, and get out. Actually, this was my belief too, right? When I started trading like 5 years ago. So pretty much you do need that experience so you can gain that confidence to understand what you are actually doing, gain the familiarity for the movements of the markets and things like that. Next in line, you will be growing your account to something you can live off of. Whether it's not even something you want to live off of, maybe you just want to be able to pay for some extra expenses or things like that. You just want an extra $1,000 for some car parts. You just want trading money to pay for your rent, whatever the case may be. But like me, wanting to have an account size high enough that I can live off of, you spend your $100 to grow it to $10,000, $100,000, whatever the case may be, and then once you start making decent amount of profits, you make let's say 10,000 for the week, or you make 5,000 for the week. You can withdraw a portion of that, and that can cover a set of bills or cover a set of expenses that you have. Because in my opinion, a majority of people aren't making more than $500, $600, $700 a week, right? So I mean, if you're making $1,000 a week, you're doing really good. And when you start hitting those 1K days, then you feel on top of the world. Don't let that type of thing put you out of place, because you do need to understand that you are probably not the best trader in the world, and losses still do happen. I'll be touching on this in another psychology video, but basically when you do take a streak of wins, you don't think like you're on top of the world, and you increase your risk size. You bet more, because that's just showing signs of greediness, and then you're running a high chance of blowing your account if you go through and do something like that, right? So making money comes last on the spectrum, and when you do start making the money, you can use that money to pay bills, and you don't really have to be taking money away from your trading account, which is actually generating a decent amount of money for yourself. So number three on the list will be something about getting experience. So there are the wrong experiences and then there are the right experiences, although you can learn from both, right? It depends on your personality. Ultimately, some people are able to learn from um, at all of life's events, and some people only learn from the bad ones, and people just get rewarded from the good ones, whatever the case may be. Um, Ultimately, you do need a set of rules to be trading. Trading isn't just let me place a bet here and see how it goes. You do need to have a set of rules in place. So you do need to have a trading plan. I'll go through and make other videos on how to build your own trading plan, how to come across useful information, things like that, how to apply information. So if you do just want my set of rules and trading style, then you can always just go over to the pipacademy.com and check out what's there. You can see my track record, all things like that. So it's just to understand that you do have right experiences and you do have wrong experiences. So, but don't be getting upset when you go through a string of wrong experiences, because you can learn from these. There's like the famous quote, Thomas Edison, who made the light bulb. Um, he tried more than 10,000 times to create the light bulb and failed. And the famous quote just goes along the lines to say, I never failed. I just found 10,000 ways that don't work, right? So that's why the PIP Academy has the saying, progress no matter the direction. No matter if we take a losing trade or a winning trade, we're always progressing, because we can adapt and we can follow through and see room for improvement, right? Because we want to have those 1K days as fast as possible so we can maintain those and start having those 10K days right up next, right? Number 4 on the list would be timing and sessions. So a lot of traders ask me like, what trading sessions do I like to trade, or what trading session do I trade? How long will I be holding my trades for, and things like that. So I'm gonna start off by saying that you have your 4 types of traders. You have your scalpers, which are gonna hold their positions from like seconds to, let's say, a few hours. I wouldn't say they hold it for a full day. And then after that, you do have day traders. Day traders are going to be the ones who hold their positions, just throughout the trading day, whether they're trading stocks, so they're trading from 9:30 to 4:30, or whatever the case may be. Day traders are more likely to be in and out of trades within the trading day, not holding positions for weeks, not holding positions for days. They're just in and out. And then on top of that, you do have swing traders like myself who hold it, whether it's from, because like personally I hold my trades whether it's from like an hour or so to let's say like 3 weeks max. So I pretty much just grab it from swing high, try to ride it out to swing low, and swing low to swing high. If you know how swing trading goes, then you know how swing trading goes. How long I can be holding positions for vary, so I'll never be able to say I'm only holding this position for 3 days max, or I'm only holding this position for 1 day max. That's just not how my trading style works. If I am day trading, then I'll be more likely to say that. But I don't really go to share my day trading trades with people, because I still do apply my swing trading methods, which is in my course, to my day trading methods, and I just get in and out within the day. And then the other type of trader that you have are the investors, and investors are more likely to hold their positions for weeks up until like years, right? These are the people that got in Apple while it was young, got in Microsoft while it was young, and now they're able to reap the fruits of those actions because they've been holding it for so long, right? And another thing for timing, I'm not trading any trading sessions, the Asian session, the London session, the New York session, these type of sessions. I'm not involved in those. I simply take my trades when I see my opportunities. I know people say the market is more volatile during the New York session, but realistically, now I want you to think about this because Yeah, they say it's more likely, but if you look at the market's trend during all sessions. So like I don't see a point why I'm gonna try to fixate on these certain New York or London session, Asian session. Um, because one thing that really stands out to me is that a lot of traders say the Asian session is going to consolidate. In most cases, the Asian session consolidates, right? But I must say, I've taken some really strong trend trading trades while it was in the Asian session. So I don't see a reason to restrict my trading based on sessions. I simply take my opportunities when I see them. Same goes for everything around in life. If you don't take your opportunities, you miss your opportunities and you have to wait for the next one. I'm not saying that the trading sessions are necessarily bad or you shouldn't use them, but just make sure you're using things that are actually useful to you and things that you can find use for, right? If you're not finding it useful, then you can drop it. It doesn't need to be a part of your system. So, number 5 are indicators, technicals, and fundamental analysis. I know that technical and indicators are the same thing, but to me at least, I do differentiate them because I'm a price action trader. I don't use indicators or anything like that. So let's just touch on the indicators first. Indicators, to me, I'm not going to say all of them are bad because if you do know how to use them, then you do know how to use them and you can make a profit from that. Although most indicators are what is called lagging indicators. So basically, what that means is once price has made its move and the candle has already closed, then the indicator stamps itself to say, okay, this is where I'm going to be, right? Now, one of the issues with this is that the price itself, the natural candles or the line charts, whatever you decide to use, these methods of describing price is the raw price. So this price is pure. It tells you exactly how it's meant to be feeling at exactly what time it's feeling it. There's no reason to be doubting this, right? But when you have an indicator, on the other hand, an indicator is simply a reflection of the price. So because it's a reflection, it's late, right? We don't want to be late to our opportunities. And on top of that, because it is a reflection, it's just a mathematical reflection. We don't need to be having all that mathematical calculated data. It's not necessary, at least not for my style. On top of that, you do just have a majority of traders who start trading and they jump onto indicators right away. And if you know a thing about psychology, you don't want to be doing necessarily what everybody else is doing. If everybody else is using the Bollinger Bands, the Bollinger Bands is going to have a high rate of failing because a majority of the people lose in the market. You can't be doing what the majority is doing or you fall into the traps that the majority is taking ultimately. So technical analysis now, if you do go through my trading course, I do put technical analysis at the bottom of the spectrum because technical analysis is ultimately not that important. There is no holy grail of trading. Ultimately, you're going to be the holy grail to your trading. Technical analysis, whether it's Fibonacci retracements, Fibonacci extensions, moving average crossovers, whatever methods of technical analysis, Elliott waves, things like this. I'm not going to say any of them don't work because I'm sure risk management can make all those strategies work, though I do prefer just to have my charts naked and just draw my support and resistance on there and seeing how price reacts to those. Because ultimately, if I add a ton of indicators to the charts, then I'll be more induced to have the feeling of analysis paralysis where you have 5 indicators telling you buy and you have 7 indicators telling you to sell. So a lot of traders have the feeling where they're not sure what to do, so they just don't do nothing and you won't gain anything from just doing nothing. So pretty much that's what I gotta say about technical analysis. Now fundamental analysis, so like any news related things, wars, economic reports, I also don't use it all. The most I'll go into fundamental analysis is if like something really big like the US election is going on. I'm more likely to just not be trading because my last experience when Donald Trump was becoming president, the market still did hit all of my key zones like perfectly and things like that, though the market was moving way too fast for me to be there to react to these things. I just didn't have a good experience with trading that, and I've learned from that that I can trade within all news situations, but I will not be trading during really big things like the US election. And things like the US election, I'm not necessarily looking out for it, but if you just like, you're an average person, you hear about the elections coming up. Right now, the elections in Canada is going on. But I'm still trading because I don't believe that the Canadian elections has such a big impact on the world as the president of who is the United States president, because the US is in everybody's affairs, so they ultimately reflect on everybody's affairs in one way or another. Now, fundamental analysis, if you do some research, some technical and fundamental mixture, you can see that fundamental analysis and technical analysis have a way of lining up at the same time. So pretty much, I don't think it's needed to be using both of these. I simply use technical analysis, raw price candlestick formations, things like this, mixing with support and resistance, market structure, some other things, the zones. I use correlation and I make sure I journal my trades so I can improve and help to give the best quality, especially for new things that I do intend on putting out for my members. Fundamental analysis, you use it if you can find a value for it. That's how a majority of things in trading are. Though I do believe you do need to have a set rule, you do need to have some set things in place to cover an aspect on all necessary things of trading. I'm not going to say you need 5 moving averages on there. You don't need the Bollinger Bands. You just need to have something to tell you to buy and sell. Simple as that. That is key right there. You don't need 12 other indications. Another thing I do want to touch on is partially on psychology. Trading has a lot to do with independent thought, right? So you ultimately don't need 100 other traders to agree with your bias. Ultimately, them agreeing with your bias has no real weight to where the market is actually going to go. And on top of that, this is ruining your mental state because now you're depending on other people to have an agreeing bias before you say, you know what, you guys all agree with what I'm saying, then yeah, let's go and do it. When ultimately you should be trading based on your own technical analysis or your own analysis. You shouldn't even be applying your own opinion and biases to this because opinion and biases don't matter here at all. It's all about your chart work or your fundamental analysis and how can you apply risk management, because risk management is also one of those really important things that you cannot forget. So last but not least, number 6, and this is something a lot of people have been asking me about, how to be able to see when a currency is strong and when a currency is weak. So ultimately, this isn't as complicated as it seems, at least the way I go through and describe it in my course. I will go to say, and I will also clarify on this, green candles simply mean good things, buyers are in control, all things like that. And when you have red candles, this shows you that the people of the country are not in a good state. They're feeling depressed, things are getting worse as it actively falls. Now, so pretty much we know that there are 8 major currencies in the world, and if you do go through, let's say you look at all the Australian pairs, you go through and look at all of the Swiss pairs, all of the Canadian pairs, all of the Japanese, the pound, and now take it in. I am talking about the majors and the minors. I don't talk about exotics. We don't deal with exotics. So pretty much now I want you to open your chart and you can go through and do this and tell me what you see. Comment down below and I will definitely reply back based on the time that you replied, and see where the market was at then and give you some assistance with that. So let's say you went ahead and you put the Australian, the Canadian, the Swiss, the Euro, the pound, put all those 8 major currencies in a vertical line and then see how many currencies, how many of these pairs are rising, and then give it a 1 point for rising, and give the opposite side of the currency a negative point for falling. When you go ahead and added up all these 28 or 29 major and minor currency pairs, then tally up all of those positive ones and those negative ones, and then put them on the spectrum from the ones that have the most positive to the ones that have the most negative. And then you'll clearly be able to see which ones are strongest and which ones are weakest. Now, I don't want to go into too much detail about this, but you know you can go through and trade the strongest one with the weakest one, and this pair will be trending very, very much. You never really want to be trading two currencies which are closely related in strength, because this pair will ultimately be represented by a consolidating market, and so the market won't be progressing much and you'll have a harder time trading consolidated markets. Instead, let's say you trade the bottom two pairs along with the top two strongest pairs, and you'll basically have two strong trading pairs, and you can then be able to get larger moves on these, because not only is the momentum going in one specific direction, but you're also pairing a strong currency with a weak currency, which is something you can be adding to your benefit, which is just extraordinary. So make sure you comment down below. Tell me what you think about that. Are you seeing the correlation there? Because I'm more likely to touch on it, because a lot of people do have the difficulty with seeing correlation. And then to add something to it, because you can do this on all time frames. If you go down to the 30-minute time frame, for let's say, and then you go and line up all of the pound pairs on one screen. You see all the pound pairs. Analyze each of them with your trading plan, and then you'll be able to see all of them lining up in a particular direction at the same exact time. Now, it may not be all of them, but let's say there are 7 pound pairs. If you see 6 of them lining up, or you see 5 of them or 4 of them lining up, it's showing you that the pound is having some considerable weakness or strength based on the other currency pairs as well. So that's it for this video. Make sure you rate, comment, subscribe, and stay tuned for the next video. JDL.